Okay, folks, good morning and welcome to Swing Trading Today. This is Bob Desmond, and what we're going to talk about today are the reasons why this sell off is occurring, and it's not what you think, the reason that you think, what changed since the negative post market action from last night to this morning, causing this morning's rally, and where do I think that we're going from here? Well, many times I will stress to members in advance of an economic report or the most recent case, the Federal Reserve meeting. I said, don't trade the knee-jerk reaction. I always say that because it's frequently wrong. And I believe this to be the longest knee-jerk reaction I have seen in my lifetime to an FOMC decision. Now, what does that mean? Well, the video I did last on Swing Trading Today was titled How President Trump Postponed a Stock Market Crash, maybe. And the maybe is this, is that on a technical basis, this market is anything but in need of a mid-cycle adjustment because we are in a late cycle. And all that President Trump can do is squeeze a little bit of fuel out of this gas tank of economic growth, and Jay Powell did not play ball last week. He cut by only quarter basis point and ended the unwind of the Fed's balance sheet a month earlier, and by doing so, stuck his thumb in the eye of the president. And as we know, the president can be a volatile guy, so this sell-off has absolutely nothing to do with China. China and the trade wars are being used as a tool, a weapon, to force Jay Powell into a bigger rate cut in September. Jeffrey Gundlach, one of my favorite fund managers, came out last night. He goes, listen, we're raising odds from a quarter point cut in September to now a half point cut in September. That's the big picture. So within a 2-month span, you would have had the Federal Reserve cut rates by 3/4 of a basis point and end early the roll-off of debt off of their balance sheet. That's what the president wanted. That's what the president, in all probability, is going to get. Checkmate. Now, longer term, is that enough to stem the inevitable? The abyss that we've begun to see these past couple of days of selling? No, it's gonna come. As sure as God made green little apples, the day of reckoning is coming. The day that we seek to find fair market in this stock market is coming. But I believe that all the powers that be will postpone it until after the 2020 elections. Let's get to the charts. All right, so what we're looking at here is the NASDAQ. You can see how we plunged overnight. We've rallied back. We are now positive on this session. We're up over 1.25 percentage points, but we are at resistance. This is a big dead cat bounce here. Maybe we'll head higher. Maybe we won't. Why are we seeing this rally? What happened overnight? Be right back. Look no further than China. Yuan futures surge after PBOC fixes stronger than expected. The Chinese blinked overnight. They opened up the yuan. The low was about 7.10. I'm not sure what's trading right now, but it's probably trading higher than the 7 mark, or else this market would be in a free fall. Let's get back to the charts. The S&P 500 surging as well, up over a percentage point, but at resistance. So what we need to see on the major averages, a pullback, a higher low, and then a continuation move higher. To get that continuation move higher, we're going to need some new positive news flow. Now, we went into the week very, very long of the gold mining stocks, taking a look at gold. At current, we are down slightly. We had a great day yesterday in our gold mining trade using the NUGT, a great day. Overnight, we hit highs not seen since 2017. At current, gold has pulled back off the overnight highs. I'm looking for a continuation breakout here on gold. I think gold is going higher. As for silver, we booked profits in silver. We've been looking to get back in, and we are very close to doing so. I'm loving the W formation here. So what we'll be looking for is a breakout above this upper band of resistance. So silver looking good. Taking a look at the US dollar. The dollar is holding on by a thread. We did reverse off of the lows of the overnight session. We're holding support at current. And we're holding 97.5. That's pretty impressive, to be honest with you. Taking a look at Bitcoin. Bitcoin is surging up over 4.4%, and it appears as though we are moving higher up and into this resistance level. Crude oil. Crude oil is under pressure. A lot of pressure lately. You saw the junk bond market begin to weaken up. The junk bond market finances the frackers. And when oil goes, so does the junk bond market and the energy sector. They're all intertwined. Now, we did recapture a support level. We're dancing on top of what was prior resistance, is now acting as support. So we may see a short-term pop here, but I don't think it's going to hold. Because when you take a look at other growth-related commodities like copper, it's a disaster area. We had a head and shoulders set up. We broke the neckline. Then we broke support. The path of least resistance is clearly to the downside. Let me get this out to you folks. Members, I will be in contact. We'll talk more about strategy. Let's see how this morning unfolds. I don't want to do anything. I want to see how this market settles down. Do we put in a higher low? Do we get a continuation breakout to the upside? Or do we break to new lower lows? Everybody have a profitable trading day, and I'll talk to you soon.